Have a professional diploma in financial thingy. In lesson 2, we'll be talking about the core framework of financial framework, buying and selling in the marketplace, Japanese candles, and learning about leveraging margin and lot sizing. Basically, we'll be learning what direction the market is moving, the candlestick formation, and the price action man. They illustrate the core concept of margin and leverage. So that buying, which way to profit, and then we sell it, and then when you buy, you're speculating and stuff. Yeah. So in lesson 2 we can see the part to profit is we do not mean that you're purchasing anything because you are not exchanging money for goods. When you buy sell, you are speculating that price will move in the favorable direction, and your decisions are based on indicating of the future price movement which one achieves through analyzing historical data. So don't make like random decisions. You must justify everything. If you find yourself hopping, guessing, so if one determine if you should be buying or selling in an upward or downward direction, but what's the best way to determine the direction trend bias? Understanding direction trend bias is very important. It's lagging indicator because it's always looking at historical data. Choosing an EMA can be created using any other numbers. Two EMAs, slow EMAs. Price action framework is 1 to 1 month period. Generally, scalpers are looking to place many trade in one opportunity, and the most common time framework of 15-30 minutes hourly. So you leverage, which small investor like yourself trade in potential of large income. If you want to trade position worth 100, you only have. It won't be a problem if your broker will set aside 1,000 in a deposit and let you borrow and do the trade. So here, this is the buying the market right here. Entry price of 1,300. You're in 1,300, and then if you're buying the market at entry price, and then you're executing in 1,400. So downward price movement. When the sellers is high and this opens, close low. So this is the bearish market. Difference between buyers bar and sellers bar. So that's important to know. So if don't buy duration of the bar only, we might end up holding the trade over a couple of bars. If the market has been moving upward over a period of time, that means on average there will be more bars closing higher than when initially opened. When you buying decision, take profit levels when you exit the trade with a profit. However, if the market has moved downwards for long enough and reach your stop level loss, then the trade will close in a loss, preferably no more than 2% of your entire account value. So it's time to look at what it means in the bearish market. Rectangle drawn between open and close. Pleasing to look at when comparing the two. I'm sure you already understand the main concept defined nature of selling in the buyer's versa lower than when initially open. Take profit level when you would exit the profit. Market moves up, stop, you will lose the trade. So close the green buyer bar, close below is the red seller bar. So green buyer bar, red seller bar. This is the selling in the market, 1400. Entry, exiting right here. So if you make a buying decision on gold at a price of 1300, it went to 1500, where you will exit it, how many green bars would exist between the entry and the exit? There is no set number of bars. Yeah, which way, upward, downward, sideways, especially moving average. Look at the past number of X bar, like been used in bars. So best to understand like leveraging trade what could potentially be a large number of money. So margin is not a fee, margin is just a small portion of deposit. You put in there 1,000 deposit. What is the lot size? Lot size is used to determine the value of each pip that you can earn. Price per pip. I want to now understand leveraging margin, how to calculate the position. A very normal question to ask. Stage indeed. The EMA can be created using any number. Small number is the fast EMA. Slow EMA using 5, 10 is a slow EMA right here. Using it to spot upward trend when you use EMA, you can spot the fast EMA is above the low EMA. What's the exact moment of the trend has been tuned upside? Using EMA to spot downward trend below the 10 EMA. Where these below it get confirmed EMA, the trend has now tuned to the downside. Is there a clear trend for random fast EMA growth? How many EMAs? Keep and look at historical data. EMA number refer to how many bars help determine the overall trend, and EMA is the lagging indicator. Exchange rate currencies are in pair. Technical short long-term shift in prices we trade. 1, 2, 3. Scalping, day trading, and investor playground. 50 minutes, 30 minutes, 1 hour, 4 hour daily. Overall trend is upward, like this. Japanese candlestick candle patterns are price moving indicators. They were introduced to the Western world by Steve Nelson. Hammer, hanging man, shooting star, inverted hammer. As open, high and low. However, if the close occurs lower than candlestick. Japanese candles on 10 price. 10. This is a shooting star. Leverage allows small investors like you to trade what could potentially be a large sum of money. You wanted to trade a position for 1,000. Margin is not a fee cost. Margin is a small portion deposit. The broker required 1% margin. That means for every 1,000 deposited. Lot size. There's a lot size. We need micro. Value of each pip that you can earn. How do I calculate this? Chief will go coming in the next lesson. Exchange rate, leverage, margin.